Good morning and welcome to episode 100 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, November 30th, 2022. First off, I'd like to start our 100th episode of Getting Rich with a shout out to the U.S. men's national soccer team. Congratulations. They beat number 20 in the world, Iran, yesterday, 1-0 on a 38th minute goal by Christian Pulisic. They had previously tied number 19, Wales, and tied number 5 worldwide, England, to advance to the knockout stage of the tournament. So they'll be one of 16 teams in the knockout stage, which is where they're ranked in the world. I think there's still more work to do if we want to perform in this World Cup. We've got to at least get one more win and get down to that final 8, and that'll happen Saturday morning at 10 o'clock, hopefully, against the Netherlands. So we'll see how that goes. Congratulations, all the same, well done. Moving to more pressing economic issues, there's one big issue hanging over the economy right now, and that's this potential railway strike. Just to kind of put it in perspective, and a lot of folks feel that we may see a strike as early as this week, 30% of all cargo by weight is moved through the train and rail systems. 467,000 long-haul trucks is the equivalent of what is moved by trains daily, and if this shuts down, most people feel 765,000 Americans will be put out of work immediately, and $2 billion a day will be lost in revenue to our economy. So we're seeing some supply-side issues there looming. In addition, the debate goes on about oil and energy and where we're going to get it from. The Biden administration is looking to relax sanctions on Venezuela to allow more Venezuelan oil into the pipeline here to fill the void of what Russia has taken away, if you will. The other side is looking for domestic production, and it's spurring a war of words right now where the administration is saying, listen, there's ample opportunity for domestic companies to drill, and they're coming back and saying that's a bold-faced lie. This will continue to play out. Let's face it, this economy runs on oil, and it will for some time. No matter what the alternatives are, it's going to take a while for them to come online and fill the void, and they probably never can. Last point. Stimmy checks. Yes, you thought you heard the last of them. Maybe not. 20 states apparently have excess, get this, excess COVID relief money that they haven't spent yet, but was given out to them anyway. They're looking at sending more stimulus checks out to their citizens to go ahead and ease the pain of the current inflation. I'm going to cover what that combination of factors that I just mentioned has to do with our economy in a second, but let's take a look at the numbers, which we didn't cover last week. I sent you instead the panel from the New Orleans Investment Conference, and this week we're looking at the numbers compared to 2 weeks ago. So today gold is at $1,761.90. That's down 1% from $1,780.79 2 weeks ago. Silver is down 1.33% to $21.61 from $21.91 2 weeks ago. Platinum is actually the only metal that's up. It's up 1/3%, $4 to $1,026 from $1,022 an ounce. Palladium is the big loser this week, or this past 2 weeks, down 10.5% to $1,944 an ounce from $2,174 an ounce. The gold-silver ratio slightly moved up. It takes 81.86 ounces of silver to buy 1 ounce of gold. 2 weeks ago, it took 81.6. And the US dollar index is up slightly to 106.63 from 106.10 a couple weeks ago. So talk about the impact of these various factors that I mentioned on the economy. The problem is we are looking at, again, raising interest rates to counteract inflation. But the problem is we continue to spend too much, i.e. stimmy checks. We continue to have too much supply side disruption. potentially from the railway strike that's looming, and with our energy issues, a lot of people feel that is going to harm the supply side as we're again putting money in people's hands. We all know how this plays out. It increases inflation over time because we're going to print more money to cover the void. That's just the way it happens when you go in debt and you're the world's reserve currency. So the answer is great. We have to raise interest rates in order to get on top of inflation, but none of that matters at all. It doesn't matter what the Fed does at its FOMC meeting on the 13th and 14th. If they raise it another 75 basis points, slow down, pause, reverse course, until we stop spending more than we take in. And that's a message to Congress. You've got to get your act together. You've got to be more responsible fiscally, or we are not ever going to get out of this spiral that we're in. Just want to touch on the fact that this is show number 100, so I'm sorry if we run a little long here today, but I want to take an opportunity to just remind everybody what we're hoping to do. We've been doing this for about 2 years now, and at least, the very least, what I'm hoping is just a weekly comment to get out to you and let you know what's the major factors affecting our economy and how gold and silver factor into that economy, and to more importantly, to protecting your finances. At best, what I'd really like to have this evolve into at some point is a dialogue. I mean, I can get up here every week and talk about the things that I think you want to hear about, but wouldn't it be better if you just told me what you wanted to hear about and I could talk about those things and comment on them and open up that two-way dialogue, share some of your thoughts with the other listeners. That's what we're hoping to accomplish. So in that vein, for the next week, basically, everybody that goes ahead and sends in a comment or a question to Getting Rich, we're going to go ahead and take all of those comments and questions, and we'll randomly pick a winner, and it'll be collected through next week, Tuesday, so that's December 6th at noon. So we'll collect all the names and do a random drawing of all the comments and questions, and that one winner will go ahead and send you a free Silver Eagle. It's not a lot, but it's just our way of saying thank you for listening and putting up with me for 2 years, and hopefully we can evolve this into what I have in mind, which is a two-way dialogue where we can share information amongst each other. To that end, ask you, as always, to go ahead and subscribe to us, like us, follow us on our social media, subscribe to our newsletters, and most importantly, don't ever forget, this message hasn't changed for 100 episodes. Getting rich starts with keeping what's yours.